Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 5 o'clock in New York. Welcome to Trending Markets for Monday, 15th day of August. Markets have closed and we do have the Dow Jones Industrial Average along with the equities markets as a whole in the U.S. Trending higher on the day, modestly higher, up roughly 0.4%, 17,545. That's what we're looking at in the current Dow Jones Industrial Average. Now, in as much as we do have the market trending higher today, and we've seen a considerable move when you look at the fact that the market had traded as low as around, what, 17,100. It's now up well over that at 17,500 plus. The one thing that we have to acknowledge is even with these prices that are higher, we are still caught in a channel line with an absolute bias to the downside. We are on the uptick, of course, of this particular price move, but we've seen this happen on many occasions as it is genuinely moved from the top to the bottom. Here it exceeded a little bit. Here it didn't make it. This was the one point we genuinely noticed the difference because it did not have the ability to move back up to the upper levels of the channel here. But once again, the good news is at least we have now broken above this midpoint. And the real question is, are we going to see a sustained rally? If we do, even if it contains a downward bias, it's still going to move it up another, call it 150 points or so, to about 17,700. The key to me is if we're going to see an extended rally or any kind of a real move in the market, it's got to have the ability to break above this channel line. As of recently, over these last couple of months, we haven't seen that. The other thing is that the top of these channel lines, although they can't cascade with a downward bias, is really coming off of these historical record highs. But when we look at the three most recent record highs, you can see that they have been diminishing. In other words, these tops have been getting lower. Of course, that would necessitate us having that downward bias, which we have. What we've got to take a stab at least one of these price points, the last one in particular, which is still above 18,000 at about 18,100, before we can really say that we're bullish. A break below this channel line right in here, that would signal an extended correction. So as long as we're in the channel line, you can trade the channel line, but I'm really looking to see when this market breaks one way or the other. So traders, we have the metals moving nicely to the upside, very, very modest, moderate move. But the one trend that really sticks out more than any other trend right now is this oil market. The oil market continues to trend lower. This is Japanese average, so realize price is now under $42 a barrel, and that's what's going to signal a sell signal for us. I really believe that we have the opportunity to see this market start to break 40 and go into 38, 37 in that area. This to me is a very, very strong move to the downside, and I do believe it's going to continue. On an aggressive trade, you can go ahead and implement a short position in the market. In terms of an effective stop, it's really got to be above about 43 right now, even though the market's trading at around 41. And the reason I'm recommending our stops at around 43, we're looking at a daily chart. Today's activity, the high on Friday, if we can just kind of plug it in, was roughly at 42.94. So we want to at least go to that point, 42.94. I'd feel more comfortable actually putting the stop right above here, which is called at 43.61. So traders, go ahead, place a stop at 43.61 or a little bit above that. You can go in and sell crude oil currently at 41.86. And traders, lastly, in terms of this crude oil play, all I've done is compress the chart that we've been looking at. We really have been honing in on a particular area in the chart and kind of blowing that up, and that's been this area. But the one thing that we can see when you go back in time, of course, this is back in 2009, and the market was genuinely above, I believe, 140, almost at 150, 144 or so, and that's when we saw this dynamic fall from grace right in here. In fact, let's go ahead and kind of tighten this up a little bit so you can see this dramatic fall, and we've even got to compress this even more. But when you do that, you can see this market has been genuinely higher than it had been at these tops at around 110, and when it broke genuinely lower. The other thing is that we had these consecutive weeks. I'm not even going to attempt to count them, but for a good number of months in which you had consistent weekly prices that were lower than the price before. The other thing is that if we kind of extend this line here, and let me try to get that as straight as possible, you can see that my sense is that if we break below this point, which we have done, we should see the market kind of go to test these lows in here, at least to the 40 area, if not 38, 37. So we'll have to see how this trade unfolds, but we are selling into a market that's been under extreme pressure. We've got historical data that shows us it's been at those price points below, so we're not looking for a market to go to a record high or a record low here, simply back to the most recent lowest lows, which happen to be in 2009. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.